This drama ain't for your mama. Oh boy, we've got drama in the market, folks. Nvidia, the most cared about, talked about stock in 2023 and 2024, continues to get hammered. This stock is now down 22+% in the past 2 months. An incredible fall. This one's down about 7% here today. At the top of this video, I want to talk about Nvidia, and I also want to talk about a bunch of other stocks in the market, some of the action we're seeing out there here today. From there, what I want to discuss is AI investor sentiment came out a few days ago. The number is absolutely awful. Investors have gotten extremely bearish on the stock market for the next 6 months. And when I say extremely bearish, I'm talking this is the most bearish number I've seen in probably years. It's certainly the 1-year high as far as bearishness, so I want to talk about that at the beginning of this video as well. From there, we're going to talk about manufacturing data and something very important that came out in that manufacturing data if you're trying to figure out about inflation, recession, all that good stuff, okay? From there, I want to watch Mr. Tom Lee, everybody's favorite bull, talking about the market bottoming this week. That should be an interesting one to react to, share my opinion and perspectives there. From there, I want to get into this one. Billionaire investor Leon Cooperman basically says he's selling stocks into strength and he's raising cash levels right now, okay? And so I want to talk about that, react to that video. From there, I want to react to this one. We got him back on the panel, okay? Mr. Short Hills Capital's back on the panel talking about he just sold Nvidia stock. So that should be an interesting one to react to, right? Yeah, man. I did a interesting post here on X here today. I don't know if you guys follow me on X. I'll put that as a pinned comment down there today if you guys want to follow me on X, or if you want to follow me on Instagram. I also post some Instagram stories here today. But, you know, it's interesting. I did this post on X. I said, let me ask you guys a serious question. Are you still bullish on the Trump stock market the next 3 years and 11 months? Or are you bearish? And it was definitely a lot of people have gotten very, very bearish around, let's call it the Trump stock market. So that's just interesting, okay? All right, guys, appreciate you joining me. As always, we've got a lot to get into. All I need from you guys, smash that thumbs up button, please. Hit it and hit it again. We got a lot of action going on. And then additionally, if you want to be subscribed to the channel, you can certainly subscribe. We are 80,000 plus subscribers strong, so appreciate every single person for being here, okay? So, Nvidia. Let me tell you guys one problem that I don't think gets talked about enough in regards to Nvidia, okay? Let me show you it. It's going to be right here. Right here. Margins. So, when in regards to Nvidia, right, I told you there's two main concerns with Nvidia right now. One is we're going to see a major deceleration of growth, which is, I don't even think that's debatable. Like, we're going to see a major deceleration of growth as this year ticks on, right? And the growth rates will get smaller and smaller and smaller. And so Nvidia will keep growing as far as revenues goes, but the growth rates are going to get much, much smaller. And by 2026, you know, it will be very, very small numbers compared to what they're putting up right now. So that's a concern number one, but the second concern is really around margins for Nvidia. And there's a belief that Nvidia's margins have peaked. And especially as AMD gets their MI350 into the market, we can call it late spring and into the summertime, right? And then as they ramp MI400, right, in 2026, that's going to put more pressure on pricing, and that's all going to happen simultaneously when the biggest tech companies are likely going to not be increasing their AI spend. If we look out to 2026, I think a lot of these companies, the big techs, including many that I own and I know very well, right? Meta, Amazon, a lot of those companies, I think they're going to keep their spend roughly flat in 2026. That's my belief, right? And so we'll likely see some shifting toward AMD in 2026 and some shifting away from actually Nvidia, which is going to make there's going to be competitive pressures in regards to pricing there, right? So it's just something you have to consider, and that's just, you know, it's just something that's weighing on the sentiment around the stock right now, and that's why Nvidia is having trouble. Doesn't mean it's a bad company or it's doomed or anything like that. It's just this is what the company's having to go through right now, and so it is what it is. You just have to kind of accept it, right? Now, as far as housing stocks, these stocks are getting nailed, man. No one wants to own the housing stocks right now. I mean, these ones just continue to feel pressure on pressure on pressure. RH, Whirlpool, stocks like that, I might be interested in getting in here in the next few months. I haven't started positions yet, but if those ones continue to weaken, I might eventually make a move there on some of those. If we look at big tech in general, you know, Nvidia is the worst stock of the bunch here today, followed by Avago, Broadcom, right? Down 4+%. Shopify getting hit a little bit here today. And then if we look at my current stocks here, it's a little bit of a mixed bag. Palantir's having a decent day out there. Planet's having a decent day. Celsius, Monster, both having nice green days here today. Wynn Resorts green, Avant green, and AMD actually green here today, right? Which is very surprising to see AMD green today, considering how bad Nvidia is getting hit, which shows you what? We have something very interesting going on in regards to AMD and Nvidia now at this point in time. Those two stocks have started the process. It's very important. Everybody understands this. AMD and Nvidia have now started the process of divergence. Many times those stocks can kind of move together, up or down, all around. Those stocks have started to diverge now at this point in time, where for the next 2 to 3 years, AMD is going to make whatever move AMD makes based upon what's going on with that company's financials over the next few years, which are going to be very, very exciting. We're going to see massive accelerations in revenue growth, in margin growth, in profitability growth. Whereas Nvidia is going to see massive decelerations of revenue growth, of margin growth, of profitability, right? And so you're going to see a major divergence that has just started. Like today, with AMD being green and with Nvidia being down, 6% or so, that's just the starting process of a multi-year divergence. No, that doesn't mean Nvidia is doomed to only go down for the next 2 or 3 years. Nvidia could still go up, but it's not going to go up nearly as much, in my opinion at least, based upon what I see happening here. It's not going to go up nearly as much as AMD will go up over the next 2 or 3 years, which is, if we look at the last 2 or 3 years, Nvidia clowned AMD. Like they got out there first and they had, the great growth rates and all that stuff. And, now we're going to see the inverse of that essentially. And so, this is a divergent cycle that's going on in regards to those stocks. Meta's flirting with going green here today. We'll see where that one finishes up. Meta's still on the pace to be $1,000 plus within the next 24 months. It's just a question of, does Meta hit $1,000 this year, or does it take till next year for them to hit 1,000? But they're still headed there, right? Nike continues to show strength despite market weakness. I mean, look at the Nasdaq today, down 1.4%. Look at crude oil down big. Look at the Dow down big, right? Nike's holding up very well. Tesla getting hit a little bit. Honest getting hit a little bit. But that one, that one's just, the Russell's down 1.3%. Honest is down barely over 1%. So it's actually outperforming the market today. That's actually not bad. So, but yeah, there's definitely a lot of buying opportunities out there that I'm seeing. If we look at commodities, I want to go to GSG here. GSG continues to fall pretty darn rapidly. Geez, just a 5-day on this one. A 5-day GSG is down about 3%. That's big for the commodity index. To be down about 3% in 5 trading days, that's pretty substantial, right? Which shows you there's definitely recession fears out there, which leads me to AI investor sentiment. Numbers really bad, man. Investors have gotten very bearish. 60% plus of folks that do the AI investor sentiment numbers are bearish on the stock market for the next 6 months. If we pull up historical data here, let's go ahead and download complete history, okay? I'll show you guys this here. Let's pull this baby up because this is going to be fascinating. We might have to go back to 2022 to see a number as bearish as that. Let's go ahead and see here. So we want to keep our eyes right here, okay? See that bearish right there, right? And so we're all the way back in 1987. Let's get it all the way caught up here. Okay, so this is our recent number. We're over 60% bearish, okay? We're going to look for a 60 number here. See how bullish the market's been for quite a while? Look at that, only 20%, bearish for quite a while now. So right here, this was November 2nd, 2023. There was 50% bearish, okay? Still haven't found a 60 number. Oh my gosh, look at this, guys. Look at this. We've got to go all the way back to September 29th, 2022, when the market was getting obliterated, to find investors that bearish on the stock market. Now, the interesting thing is, in regards to that, right, is the stock market bottomed very shortly after. Stock market bottomed around October, November 2022. And so very shortly after that horrible 60% plus number came out, the stock market actually bottomed, right? So I find that fascinating And I actually find that as a pretty bullish signal. That's actually extremely bullish signal. If you ever see that number get over 60%, it usually means buy. Because I can tell you, if you were buying stocks September 22nd, 2022, and stocks September 29th, 2022, you were getting steal deals all over that market. You didn't get the absolute low, but you got very close to the lows on all the big tech stocks at that particular time. You could look back at the stock market chart. Now, if we go back to the great financial crisis times, right? Let's see where things were at back then in 2008. So right here, look at this. October 9th, 2008, 60%, 60.8% went bearish on the stock market for the next 6 months. What a phenomenal time to be a buyer of stocks. I can tell you, if you were buying stocks, October 9th, 2008, it was a very good time. And other than that, we didn't hit a 60% number any other time other than that during that great financial crisis time, right? So the moral of the story is here, 60% numbers on AI investor sentiment do not happen often. Like, it can be years in between you getting a 60% number. So the fact that we got a 60% number here, at the end of the day, guys, that means buy. It means don't run from the market, right? And it's kind of sad. Like, I got a message, I saw a message from somebody earlier today. They were going to join the private stock group, right, and get access to all the course curriculums and things like that and get their knowledge up to a higher level. But then, they got freaked out and they're like, man, sentiment's bad right now. I might come back, and be interested in something like this in like a year or two. And I'm like, dude, like, this is the time, like when things are dramatic, when people are scared, this is the best time when you want to start researching, studying, like understanding everything to look for in stocks. You don't want to do it when everything's perfect and the world's perfect and all the stocks are at all-time highs. That's not the time you want to do this. You want to take it serious when there's drama out there, when 60% plus of investors are bearish on the stock market in the next 6 months. That's the best time to be going through those course curriculums and learning all this stuff that you got to learn. That's just, but it's so sad, but it's the same thing that the retail investors go through every time. They get hyped on the stock market going up and up and up, right? And then as soon as, stocks will drop 20, 30, 40%, they run. And it's like, dude, like, what are you doing? Like, it's just, they need to be doing the opposite. It's frustrating, but it's human nature and it happens again and again and again, right? Manufacturing surveys steady despite fears over tariffs and inflation. Factory activity in the U.S. eased slightly in February, still indicating a modest expansion despite executive worries over the effects of tariffs, right? So here they say, commentary in the survey showed anxiety about looming tariffs. Quote, the incoming tariffs are causing our products to increase in price. Sweeping price increases are incoming from suppliers. Most are noting increases in labor costs, respondents said. So that's the one major risk, and I talked about this even before Trump got in office, right? The big risk in regards to tariffs for this go-round for Trump is a risk he didn't have the first go-round, right? And that is, in the first go-round, there was nothing to be worried about in regards to inflation when Trump took office, right? That's a big difference now. We went through massive amounts of inflation, and tariffs are inflationary in the short term. Over the next 5, 10, 15 years, that's debatable if that's even inflationary. But I can tell you over the next 1 to 2 years, there's no debating it's very inflationary. Like, the prices will get passed on to consumers. That's just the way it works. And so at the end of the day, like, Elf's not going to take all the hits on their margin. They're going to pass that on to their consumers. And so isn't every other company out there, because that's what companies do. Companies don't just sit by and say, you know what, okay, we're just going to take 25% off our margins. Like, no, that's not how this works, okay? So the consumer ends up paying the bill in the end. In the end, the consumer always ends up paying the bill. But the problem is the consumer is not in the spot right now where they can foot that bill. I can tell you, in Trump phase 1, they could foot that bill. They were in a much better spot, in my opinion, because they hadn't dealt with a major wave of inflation. They've dealt with a major wave of inflation, so you can't go put more inflation on them right now. It's not going to end well, right? And so that's why I think the tariffs are causing a lot of volatility in the market in the short term and a lot of worries, because people will look out there and like, I don't think the general consumer is in a spot right now to be able to take massive price increases. If anything, the general population is looking for deals right now rather than price increases after going through several years of inflation, right? So that's just a little food for thought there. Tom Lee.
And Fundstrat Capital CIO, and I can just see you. This is Tom playing out exactly as you said choppy. You said exactly this. You said choppy for how long? But then the S&P again starts moving. And this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
Could we be bottoming this week? I think that's a realistic possibility. Obviously, it's no guarantee, but I take you back to what? I take you back to the AI investor sentiment number. You ever see a 60% number, you're likely close to a bottom. That's just like how it's played out. Like you get close, you get that 60% plus number, like bottom's coming very shortly, right? You go look back to 2022, we get those back-to-back 60% numbers of investors bearish on the market the next 6 months, and we literally get a bottom, a few weeks later. You look at the October, was that October 8th, 2008, right? You get that 60% plus number, and guess what? Stock market bottom very shortly after. So the moral of the story is here, he could be right about the market bottoms as early as this week, but you could also say maybe it lasts a few more weeks, right? And then we get the actual bottom, right? But the moral of the story is you're closer rather than further away from that.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs, because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline.
Yeah, but to be fair, on Fridays, don't trust the market moves on Fridays a lot. And the reason being is you have a lot of options activity going on. I'm sure throughout the week, a lot of people are buying put options. That can cause, the market to be funky on a Friday where the market bounces back and the market maker has to, offset things. So Fridays are the one day that you got to have trust issues with the market on a Friday.
Yes.
For financial markets, or a continuation of very expensive, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that. Wouldn't you?
Yeah. I think, or even rebuilding parts of the U.S.
Right, exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye, because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than one or two rate cuts, I could see the market rallying on that.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think the Trump put comes back. So I think it helps markets.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? Let's say we do have a softer jobs report. The Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. The Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, it could be well under 100,000. And if it is, I think the Fed would actually have to get off their hawkish paws.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
So he kind of leaned toward this upcoming Friday being a bottom, right? Which is interesting. So me as a long-term investor, what do I shake out of all that? I'd rather not bottom. I'd rather not bottom. If you had to ask me, would I rather the market bottom this week? No. I'd rather the market go down for the next 3 months straight, 6 months straight. I want stocks for as cheap as possible. As somebody that buys every single week, I want stocks for as cheap as possible. I'm not planning on selling all my stocks and retiring next year or this year or the year after. And so as long as you're not retiring and selling out of your stocks completely, who the F cares? Where stocks are, we'd rather have lower in the short term, right? And that's just something that experienced investors understand. Newer investors have trouble understanding that concept. It takes you a little while to wrap your head around that and be oh yeah, I get it. But sooner or later you get it.
Issues for that, we have Lee Cooperman, Chairman and CEO of Omega Family Office. Lee, great to have you with us.
Thank you. Nice to be with you.
Where are we in the markets in terms of the macro? There are concerns about the impact of tariffs on the economy. There's concerns about inflation maybe picking up with the hotter than expected CPI print last month.
Let me kind of explain things. I'm 82 years of age. I have some health issues I'm dealing with, and I'm not looking to get rich. I'm looking to stay rich. And I don't like the environment. I don't like what I see.
Oh shoot, man. I don't like what I see. That looks like a lot of bottles of medication back there, does it not?
It's very confusing, and I work very hard for two reasons. Number one, I want to be right, because I have an ego like everybody else. And number two, all my money I worked for all my life is earmarked for charity. I like to have more money to give away. So I'm very focused on things. And, the president's on the right track, but I think he's doing things in a manner that is very destabilizing. So I have a conservative view. I don't like the action in gold. We're in the 97th percentile of valuation, and he's trying to change the whole ethos of the country. I look at the Statue of Liberty. I think the message of the base is give me the poor masses the earning to be free, we're rejecting that now, and we're taking a different approach. I understand what he's doing. He's focusing on the deficit, but which has to be focused. But focusing on the deficit is contractionary. The number of companies that benefit from the substantial deficit we've run.
Wow, yeah, that's a big drop in Nvidia. Nvidia was down a little less than 6% just a few minutes ago, right, when we were looking at this, and now Nvidia is down over 8%. That's a pretty big deterioration very quickly. It shows you how rapid things can really fall.
In the last number of years, and the desire to eliminate that deficit, which is the right thing to do, in my opinion, is going to create contraction.
In terms of being conservative at this point, Lee, what does that mean in terms of allocation?
Well, I think, the market multiple is too high. I look at the world and I say, does the stock market deserve to be 23 times earnings, which is about where it is? And I say no. And so I'm looking for things that are selling at a discount to a market multiple and have growth prospect.
Oh, and then see, that is why, folks. That's why right there. I don't know why I muted it there. Okay. Let's see. Oh, I think I got to hit this button up here. Do I got to have to hit this button? I never even knew that thing worked like that. That's why, you shouldn't really look at the market in general, in my opinion, just for the piece. Always look at companies that you're interested in, right? So I pulled up 3 stocks here, right? Google, AMD, Meta. If I was just look at those 3 companies and kind of think about, what the longer term growth prospects are for those three companies, right? What is their revenue growth going to be looking like over the next many years? What about their net income growth, earnings per share growth, right? All three of those companies I think are looking very good. AMD and Meta, obviously, well, AMD should have the best growth for sure out of the three over the next few years. Meta should be number 2 and Google should be number 3, right? But at the end of the day, like you look at forward P for Google's under 20, for AMD, which should have significant growth, is around 28 or so, and then Meta's around 25. Like that's very attractive valuations for all three of those stocks. Very attractive valuations.
Energy transfer yielding close to 7%, selling around 11 times earnings. Relatively new name for me, Fidelis Insurance. Book value of 30, stock price of 14. Buying back stock. They're an insurance company. In a hard market, they should be able to earn 20% on equity. It's $4 in earnings. The stock is 14 and change. So it's less than 4 times what I think they earn. So I find a number of things. Lithium Motors in the car dealership area, very cheap stock.
In terms of Vertiv is also one of your top holdings. I thought that was an interesting one. That's,
Yeah, I mean, the main issue with a lot of these stocks that Leon Cooperman's pitching here, let's call it that, dude, a lot of people just don't want to own these sorts of companies, right? An insurance company, an energy company, people don't want to own energy stocks. He's pitching a car dealership, right? People don't want to own freaking car dealerships. Are you kidding me? And so it's just like, these companies, like he makes a good point, and that's a tough thing as a value investor. Sometimes you see companies that you're like, this is a very attractive valuation, but then no one freaking wants to own these sorts of companies. So they're always going to trade cheap. They're always going to look cheap. Like, yeah.
Cooling for data centers, artificial intelligence play.
We bought that at a tenth of the current price. We're holding on, but we pay taxes, so we're not looking to create tax liabilities. We're taxable investors. We invest, we don't trade. But for new money, I don't think we'd be putting new money there.
Mm-hmm. Oh, is there something that happened in the AI trade that's changed it, or is it just the tremendous run it had until the end of January or so?
You have a contrarian bone in your body. Every third word on TV is AI, AI, AI. So either the position, it's been discounted, or it's not real. So I take the position that it's been largely discounted, and I think it's a positive, no question about it.
No.
It's going to raise productivity.
He's basically talking
but
about
I think it's already been discounted. So I have a very cautious view of the world. I don't like what I see going on.
Right. You said you're managing most of your money for charity. I'm wondering, do you have a cash allocation since you're so concerned, at least near term? It sounds like longer term, you think the administration may be on the right track, but shorter term, it's creating a lot of volatility. So what are you doing to weather the shorter term? Is it only just, do you still have most of your money in equities, or is there another allocation to treasuries?
I think short-term cash is competitive these days, yielding 4 or 5%. Mm-hmm. And I would say that I have a very negative view of bonds. Bonds don't make any sense to me at 4.2%. And I realize Scott Besson, who's a good man, he's basically talking about 2% bond yield. I don't get it. I don't see how. Every day I'm seeing more CapEx being announced in this AI area. There'll be big demand for money. We have guns and butter policy in Washington. So I think the rates are going to head up in the long end, and the Fed can cut them in the short end, but I think the long rates are going to go up. So I don't like bonds. Just one thing your viewers should keep in mind, the only way bonds adjust to higher inflation is decline in price to keep the coupon current. Stocks adjust to inflation by raising selling prices, which lift a nominal level of revenue and earnings. So I'd rather take my chance in a stock than a bond, given everything I see.
So your view on the long end of the bond in terms of yields going higher, what is that going to do to the market? I mean, that's going to be a cap on the markets, I assume?
Yeah, I would say so. The stock market doesn't have any equity risk premium currently. And so if rates go up, I think it's going to become more negative for the stock market.
Interesting comments there. Yeah, I don't know about the 10-year going up. I mean, especially if we have more and more recession concerns. So I don't know about that. All right, next one up here. Steve Weiss sells out of Nvidia, and my gosh, look at the deterioration in Nvidia. It's been quite dramatic just during the course of this video.
It's down 3% from its high, and obviously one of the reasons for the weakness in the market at the index level specifically is Nvidia, which is down again. It's take a look at Nvidia today.
Yeah.
It can't get any footing from earnings. It's been down about 5% today. It's off more than 11% year to date. It is the big issue, along with momentum. You're out of it completely now.
I am out.
When did you sell the rest of it?
I sold the rest of it when they reported earnings. So it's I didn't get it on the upswing in the earnings because it went into the green. I sold it when it started to go into the red. Look, there are a few issues with Nvidia in my view. One of them being that with Apple, for example, you're starting to see them make their own chip, and others all have plans to. It's got competition. Also, it's been reported that Nvidia that China is buying the.
But hold on. So this is something these Wall Streeters talk about. Oh, it's got competition. Not really. I mean, to be just quite frank with you guys, and once again, I own several companies that make their own chips as well, right? Including obviously Meta and Amazon and these sorts of companies. At the end of the day, those chips are made for very specific products. They're not really competitors to Nvidia. Nvidia and AMD. Or like AMD's Nvidia's only competition in the world. AMD's it. In terms of making extremely high-end chips that are the best of the best. And that's it. It's a two-man race. Intel's not in that race. There's other custom companies that make custom semiconductors, GPU. Like, at the end of the day, it's Nvidia and AMD. If you want the best for general purpose, whatever, you're going to Nvidia or AMD, okay? So we just got to be really crystal clear about that, because I hear this point talked about a lot. Oh, and it's like, no, that's not the way this works, man. If you want the best of the best, you go to Nvidia or you go to AMD, and that's
chip
it.
Through other countries. So I think that's an issue for them. And then finally, when you take a look at what tariffs could do, and Taiwan Semi has been called out for tariffs. That stock's really gotten hit. It's not reflected here, but they'll pick up the excess capacity.
Well, they're about to announce, we think, according to the Wall Street Journal, a $100 billion investment in the U.S., something you may hear more about as the afternoon progresses.
Right. Most of which, frankly, has been announced already. But the point on Nvidia is that a lot of people didn't even know why they owned it. They owned it for the momentum. And they owned it because they didn't want to sell it because of taxes. And I think part of the hit to technology overall is that those that came into the year saying, okay, I'm going to wait to sell until the next year, 25, and hopefully pay lower taxes or just delay my taxes for a period. They said, you know what, I can't hold on anymore. So it's a combination of factors that hit that in tech. But it's really notable that the only 2 of the 12 sectors that are down year to date in the S&P are information technology, which is tech, and consumer discretionary.
Which is obviously heavy weighting towards Tesla and Amazon.
Exactly. And I actually am still negative on the market, not bearish, but still negative, and looking to raise cash. That's one of the other reasons I sold Nvidia.
All right, shareholder snipe. What about Weiss saying, you know what, you got all these cross currents now in the name, hasn't traded well since earnings. Right. The only time it's really traded, quote unquote, well was pretty recently into the print, 5 days or so into the print. That's it.
Yeah,
that's it.
Yeah. And guess what? The print was obviously solid. It was up 70%. Sales were up 70%. Earnings were up 70% year over year. $35 billion in revenue on the data center, which is up 93% year over year. We were expecting $42 billion for the guide. They guided to 43. But to Weiss's point, I think export controls are obviously a concern. There is some third-party selling via China, where folks are buying their GPU chips. There is absolutely continued demand, but I think, it's obviously decelerating. We can't see 100% year-over-year growth in these metrics quarter after quarter and year after year. So I think that's what a little bit of the digestion is.
Wow. Yeah, and it's interesting seeing the weakness in Nvidia. Holy smokes. Look at that stock getting close to a 24% downward move in the last 2 months. 8.7%. We'll see where it finishes out, but it's definitely weakening as we get closer and closer to the close of market. So drama time, folks. shoot, man, I might have to step out there and buy something here today, okay? Appreciate you guys joining me as always. Thanks so much for being here. My X will be linked, formerly known as Twitter. That will be linked as a pinned comment down there, as well as my Instagram, if you guys want to follow me on either of those. If you want access to 1000xstocks.com, you can go to 1000xstocks.com and apply for access on there. Much love and have a great day.